Hello, and welcome to the Smart Money, Dumb Money Show, hosted by yours truly, Keith Richards. I'm the President and Chief Portfolio Manager at ValueTrend Wealth Management. Welcome aboard. Today, we are going to cover a couple of things. First of all, we're going to cover the ValueTrend Bear-o-meter reading, and I blogged on that a couple of days ago. The barometer is a reading of the market's risk-reward basis on a relative basis. So it takes a look at how much risk compared to a normal situation on the stock market there is versus potential reward. Surprisingly, the barometer measured very low risk right now. It was measuring 6 out of a potential 8, where 8 is lowest risk possible. Not a bad reading. This despite the fact that it's pretty inarguable that the price to earnings ratio and even technical momentum indicators are pretty overbought or overvalued right now. So we'll take a look at that. We'll also be looking at the latest Reddit stock boom. We're all aware of the GameStop spike and fall. And I got a question recently as to whether that kind of event is possibly predictable using old school analysis. In fact, this individual is asking me, is old school analysis dead? So let's cover that. So I'm going to share the screen right now, and I'm going to bring you right over to the barometer. So first thing I want to talk about is why the stock market is still actually in a fairly bullish position despite the fact it's overbought. And we'll look at a few charts here. One of the things we want to look at to determine that the market has got good internal strength is this line, which is called the advanced decline line. It takes all advances versus all declining stocks, and it measures if there is net greater advances than greater declining stocks. And you can see the line is rising with the market. That's actually a good sign. So that's one of the things that the barometer suggested, the barometer indicated as a positive factor. The other factor we look at is whether the stock market is ahead of its 200-day moving average. Now this red line here is the 200-day moving average, and this is the recent level. Now, it's currently sitting at around 11 or 12% over its 200-day moving average, and I tend to say anywhere over 10% is starting to get overbought. So absolutely, this market is a little vulnerable. In fact, if we looked at traditional indicators, which I'll put up here, you can see that this is a stochastics indicator. It's starting to roll over. RSI peaked at an overbought level and is starting to trend down. So even MACD is starting to show possible signs of rolling over. So I am not discounting the probability of near-term volatility based on these overbought indicators. But when you have a stock market that is trending up with higher highs and higher lows and above the 200-day moving average, it's still considered bullish according to the barometer. This is another breadth indicator. We can see that the black line, which is the transports, are right now not diverging in direction from the industrials. And we can also see that many of the sentiment indicators that I use, such as the put to call ratio, are right kind of in the middle. There we are right there. They're not complacent and they're not overly fearful. This is another one, new highs versus new lows. It's a breadth indicator that I use more of an indicator for momentum of breadth, and you can see it's right in the middle. So again, market breadth is not overdone. This is the 200-day moving average number of stocks that are over the 200-day. It is overdone, but that's actually not a component in my indicator because you can see it tends to stay at that level for long periods of time. Now, this is the 50 days number of stocks over the 50-day moving average, and it's right in the middle. So again, not a bad situation, fairly neutral. This is the VIX, and I'm going to take a closer look at the VIX, and you can see that a week ago we actually had a signal. Anytime it gets over 35, I get a signal that it is actually oversold, and that's on that recent sell-off we had last week. Well, we're right down. If anything, the VIX is starting to get a little complacent again. To get closer, it gets to 20. There's a minor danger signal, and we are at around 22. But it's still off that 20 line, so I gave it a 0 as far as it's not a negative. So overall, we have a pretty bullish looking market. One of the indicators that I don't like to look at is the smart money, dumb money indicator. This is by Sentiment Trader. The dumb money is the red line. You can see it's very high confidence, and the smart money is the blue line. You can see very low confidence. When they diverge so much as they did here, you can see that often, dumb money here was very fearful right at the bottom. And you can also see periods where dumb money was very optimistic. They're fearful there again, and very optimistic near a market peak there. So we're in that zone where it is a little kind of skewed towards dumb money being bullish. And of course, market valuations, the good old PE ratio on the S&P is around 39, which is the third highest of all time. So there's no doubt about it that the stock market is a bit overvalued. But we can't argue with the trend. The trend is your friend, as is said. So we're going to carry on being bullish. Now, the next thing I'd like to cover is the blog I wrote recently on, can you predict the next Reddit-inspired, Reddit group-inspired stock move. Now, this is the most newsworthy chart that we've been looking at. This is the GameStop chart. Now, what's interesting, there's GameStop. Now, it's pulled back since I wrote the blog, but someone was asking me, as I said, can you predict this stuff ahead of time? Well, my argument is that yes, we can't predict a Reddit group, pilfering of the shorts, but we can most certainly predict that the stock is setting up for something, because way before the Reddit group got in, you saw it was in a declining trend, but it began to base. No more lower highs and lower lows. In fact, it was basing. It broke both the trend line and the neckline of the base quite a few months ago. So it was setting up for something. Nobody could predict this Reddit move. Nobody could predict it. But there was something going on that the stock had a potential for some upside. Now, there's another one. AMC was also a Reddit mover. Now, this one was in a downtrend, did base, but it moved so quickly, as you can see here on the chart, that you couldn't have possibly profited off of that. However, good old BlackBerry, most definitely, that was a perfect setup. In fact, for disclosure, we don't own BlackBerry, but we did buy Fairfax because we like the insurance industry and whatnot that Fairfax Financial has in it, but we also kind of looked at it as a backdoor way getting into BlackBerry. We didn't predict the Reddit group's short squeeze, but we did like this. So it broke out from a base. It was in a downtrend, base, broke out, tested the neckline, boom, there's the Reddit group, pushing the stock. Doesn't matter what the reason is, the setup was there for something to happen. The only one that I would say wasn't a good setup was Nokia. That was another one that was targeted by the group, and you can see it kind of spiked. This is actually a long tail on a candle one all the way up here, but didn't last, and it ended up still in the downtrend. So Nokia really wasn't much of a move. Silver was briefly targeted earlier this week. Had a bit of a spike. You can see on the far right-hand side of the chart, but then it virtually disappeared right away. Now, somebody was as I said, asking, well, could you actually find a way of identifying these stocks? Well, there's different websites. This is one service. They're saying that you could charge $7 a week or something for this information. You can find shorting information all over the internet. I'm not promoting these guys. I just happen to find it, but they do seem to have a list of most shorted stocks. So you can see this GameStop is 88% shorted, and on we go. You could maybe use this as a hunting ground to look for those technical platforms, base breakouts that we were talking about. And who knows? You can't predict if the Reddit groups are going to move on the stock and try to squeeze those shorts, but hey, it gives you a hunting list. So there's always a way, is what I'm emphasizing. I'd like to just finish. I'll take us off of screen share for a moment, and I'd just like to finish by noting that last week's comments that I made on oil seem to be so far moving. I wasn't expecting oil to move super quickly, but hey, I'll take what I can get. Oil's been in the news in the past week. Traders are starting to bid it up. It's moved even since I began talking about it a couple of weeks ago at around 52 bucks. I think it's around $55, $56 a barrel right now. And I do still see 60 to 65 on oil. So I think there's lots of potential in both the producers and oil itself. You can read my argument behind that on the blog at ValueTrend.ca. Finally, speaking of the oil trade and all these other factors we're looking at, there's a lot of rotation going on in the market these days, and I know I harp on this a little bit, but if you feel that you are not rotating your portfolio to stay with these transitions that the market is clearly making these days, then maybe it's time to talk to us at ValueTrend. We're happy to talk to you about how we do things. Take a look at our performance numbers. We tend to do very well when markets are volatile. That's our strength. And actually our performance recently in the massive volatility we've had has been pretty darn good. Take a look online. You'll be able to see we show our performance to the world. We don't hide anything at ValueTrend. So thanks for watching, and we'll see you next week.